Paul, I figured we would just start by talking a little bit about your early years, your history, how you got to where you are now. Very softball, easy questions, just big timeline questions, right?
Sure.
Um, and early experiences along the way that just kind of allowed your approach to evolve over time as well. So, yeah, take it away.
Sure. Sure. Thanks, Sammy. Thanks, Al, for this opportunity and welcome everyone. Risk is a significant factor that we all deal with every day, right? I want to talk a bit about that, of course, tonight. And I how I got started with things in my life is literally I grew up on a farm, and with growing up on a farm, I was able to learn all about business ownership and also a lot about responsibility. It really touched me those many years ago about owning your own business and having control of your decisions. Uh, you know, some of you own your own businesses now, of course, and you realize that it's probably more work than if you're employed. But with that, you have that feeling at the end of the day when you're tired that you've made your own decisions, you did your own things, and you have control over your life and your business. And that to me spoke to me back then in those years, and that's kind of how I've been my whole life. So growing up on the farm, went off to college, and in college, I had to fund myself and pay for my own college and tuition, and so that taught me a lot right there as well. Taught me a lot about discipline and working extra hours that we had to do. And then from there on to professional life. But when I left my residency, so then I went to medical school and then residency, and a lot of you know I am a head and neck surgeon for many years. And then when I came out of residency, though, to me, there was no other way than to own my own practice. So that was back in a day when it was still possible. And so I started my own practice back then and worked and got employees and eventually partners. Um, and I grew that individual practice to 10 providers, 60 employees. We had 12 outreaches or 12 different offices that we worked out of. And then I was also fortunate enough to be able to be in a position to own our own surgical hospital in our town as well. And so we had 60 uh, surgeons, 60 surgeon owners. We had about 325 employees, 16 operating rooms, 32 hospital beds. And I was on the board of directors of that company and eventually became chairman of that board for the last 15 years of my life. So um, that's how I learned a lot of things, about business, of course. But one thing that struck me, even despite all of that I had learned, I realized that at some point, that I was just trading my time for money, and I didn't own a other side business that could be a source of appreciation and cash flow. So I then partnered with another guy, and we started a development company, and we grew that development company. We eventually grew that to about 400 million in asset value, and I worked in that company and was partner in that company for about 14 years. And that taught us to have something on the side besides my medical career. I eventually retired from medicine a couple of years ago, and then I was also bought out of my development company. Um, but my wife and I also had started a family real estate company many years ago as well, and we have that today with our kids. And so now we just a year ago or so, we decided that we wanted something more than just the appreciation of real estate, and we decided we wanted to be have a cash flow business, and so we have started a medical business, a medical physical therapy and balance clinic, and we are doing that today, and we just opened our doors about a month ago, and we're having fun doing that. My kids work with me, my son and my daughter, and I think they're having a good time. And I love giving back to that generation. And so that's where we are today. Um, we are in those businesses and really enjoying it. Um, and that's how I got started.
That's
Ma-
great.
Amazing. And you got me thinking this. You made it sound like it's so easy and everything just worked out. So walk me through like your first decisions, when you decided to maybe open your first clinic and become a private clinic, or maybe earlier decisions. How how was that risk taking? How gutsy were you? Did did you know what was it about? Did you study it well? Did you just jump? Walk me through those early decisions.
Well, so now you're getting me into my discussion about risk, and and I kind of break risk down into personal risk and then deal risk. And I really don't think that you can understand deal risk, investment risk, unless you understand yourself. And I know that seems kind of trite, but uh, I thought about this here a couple of years ago as I was retiring and things, and you really need to know yourself. And how do you do that? How do you get to know yourself? And one of the ways that I did it, and I think that it is probably done by a lot of people, is that you have to find those things in life that you enjoy purely and you kind of get in the zone. You get into a situation where you're doing an activity that you probably lose time over. And all of a sudden you look up and 2 hours have passed and you really enjoy that activity. To me, that's your natural DNA. And when you know yourself and you know what makes you tick, you will then begin to know your limits. And then you will also begin to know your risk tolerance. So for me, Al, as I said, having that experience with our farm business when I was growing up, to me, there just was no other way. There's no other way to really live my life except for to support myself and to own my own business. Um, so there's a there's a book out there that I really love. It's called The Psychology of Optimal Experience. It's written by a guy with a funny name. His name is Mihai Csikszentmihalyi. He's an Hungarian psychologist, but he's widely regarded as one of the founders of positive psychology. And he developed this concept of flow. And flow is that mental state of being fully immersed, focused, and enjoying an activity to the point where time seems to disappear. This is often experienced in athletes or artists or professionals who are deeply engaged in their work. And when you get into that flow of what you do, then you get to know yourself. And I think back on two activities as a kid. I went back and just kind of thought to myself, who was I as a child? And there was two activities that I really loved that I got into the flow. And one is I love to read. I was one of those little kids in elementary school that would beg their mother to buy these little paperback $1 books, and I would devour them. And I really love to read. And I think my love of reading really enhanced my life. Gave me different venues to think about and think about the entire world. The other thing that I really loved to do when I was a child was I like to put together model cars. Again, I would beg my mom for these little cheap model cars. You could put them together and glue them together and paint them and things. And I could sit for hours doing that. And from that, lo and behold, I become a surgeon, so I like to work with my hands. I like to do things with my hands and to work that way. And because I know those things about myself, I kind of know my limits and my strengths. When you know your limits, you will also be able to know your risk tolerance. So I am more of a people person. I'm more of I saw somewhere around 25, 30 patients a day in my practice, and I think I can read people pretty well, but I'm probably not all that great about data. I'm just not a good, deep into some of the minutia data that I need to be in with our real estate projects. And so what I do is I find people who are good at data, and they would make good partners for me. Um, and that is one of the ways that I manage risk. I don't try to do everything that I don't feel I'm good at, but I do capitalize on the things that I feel I am good at. And that is a personal way of managing risk.
I really like that. That reminds me of I had a former boss at a CPA firm say to me, "Why would I have you play to your weaknesses? I want you to play to your strengths, you know? So let's make sure to put you in places that you'll be good at them, and then we'll bring in the team." So that really resonated with me, Paul. Thanks for sharing that.
And that brings up the topic, the fact I love to say is that real estate investing is a team sport. Um, I would not be where I am today if I had not had good partners. And knowing which partners to complement your strengths and to help you with your weaknesses, that is a huge way in my mind to manage risk. Um, I going back to your question, Al, about how you make some of these decisions. I read something recently that was that resonated with me, and that is the fact that investing in real estate is like a poker game, and it is more like a poker game than it is a chess game. So in chess, uh, all the pieces are laid out. You know the rules. And if you're smart enough, you can think 10 steps ahead and you can do well. But in poker, you don't have all the cards. You only may have two cards, three cards, and there's two or three cards that still need to be put together. And you don't know where you're going with that particular hand. Um, it you need to win over an entire night of poker. You may lose several hands, and that's okay because the game flips back and forth. And so it's a process. And so, to your point, Al, I didn't know where I was going. I didn't have all the answers, but I knew that every day I just had to do my work, and things would take care of themselves. Uh, um, I knew that if I took care of the details, the process would take care of itself.
Beautiful. My very first real estate deal was not the best. And then I took maybe a traumatic response to it becoming too conservative to make sure that I don't, because my first deal wasn't doing great. And from that experience, I missed a few opportunities, and now I'm kind of recalibrating. So it's almost like it's an evolution that, you need to hit these singles. You need to keep hitting these singles. Don't aim for the
Okay.
home run. And then eventually you'll have a home run and you'll lose some and you'll make some. But there's a lot of investors who try to time the market calculate every single angle. And like you said, the economy has half the cards, and there's so many variables that are not in your control, and you still have to make good decisions, good enough decisions, and proceed. And it's about accumulation. So I see that accumulation process. As long as you kind of consistently know yourself, like you said, having the partners, and continue to learn. I mean, I would say I continue to rediscover myself. I don't know if it was an evolution as well for you, but like I thought I wanted to be building new products and technology and software, and that was my life. And when I got into real estate, I got into investing, and now, like you said, you ended up going through multiple different businesses. Some was trading money for time for money, and then you did investments, and now you went back to cash flow. And in a way, that's kind of where my head is now. Real estate is happening, we have the investments going, but I want to now start thinking about cash flow and businesses too, to have that balance. Um, Maybe if you can touch on that evolution of knowing what partners you want to work with, because also partnerships comes with its own good, bad, and the ugly. So you talked about complementary skills, but what else did you experience and learn over the years about partnerships decisions, if you will?
I think that's part of my strength in reading people. I think I can detect the BS from the truth. Not to, it doesn't take me too long to do that. Um, and this plays into the part I was going to talk about with the risk of the deal itself, is that you need to know your sponsors and you need to know your partners. I think it's basically getting those partners, knowing those partners that complement your strengths and that you have limits by, and you use those partners to your advantage. It's difficult. I've had difficult partners too, that I really have, and it is a matter of reading people, and then again, not everybody is good at that. You want people with experience, obviously. You want people that have done good deals, and you want people, honestly, who have failed. You want people who have gotten into trouble before, and how did they get through that trouble? And I suppose it's a little bit about how people choose their surgeon. Uh, they go to someone who has done a lot of those surgeries, and you have to understand what happens when everything doesn't just go smoothly. I like to say that with every surgery I did, I had a plan A, B, C, D, E, and F. What would happen if this happened? What would happen if that happened? And be able to talk to the patient about that. What would happen if there's these complications? Then what's your next best choice? So I think that's the same thing with real estate deals. You know very well, Al, that when times are going well and the interest rates are low and there's high demand, and real estate is sometimes pretty easy to do, but most of the time there's challenges, and you have to understand in those people that you work with, how do they deal with those challenges? How do they work under pressure? And that's how you pick those people. I wanted to say one other thing about just risk itself. And there's many people, and I know a lot of these people that don't like risk. And they think that how you eliminate risk is you don't participate in the game. You stay in bed, put your money under a mattress, and that way you have eliminated risk in their mind. But we all need to understand that risk always exists. And our job is to manage that risk, mitigate that risk the best that we can. And I would argue and propose to you that staying in bed, putting your money under the mattress, and not participating is more risky than playing the game.
Yeah, I like this idea. We talked a lot in the last week or so on our team about taking the leap in different ways, and I think this um, transitions well into our talk about approach during different cycles. And this is a diagram that we've presented in past webinars. Maybe I can pull that link up too. That was like, I think last February. Feels like ancient history at this point. Um, but, as we see these upturns and downturns, like you said, especially in tighter times and times of high pressure, right? And when things aren't going so well, that's when you see the strength of a deal, the strength of your partners, all those kinds of things. How have you adjusted your approach over time, or how do you adjust your approach in real time?
Um, do the homework. You really, really have to do the homework. And I'm not proposing that any of this is easy. Um, like in anything you do in life, you got to do the work. Um, uh, I like to say that I'm probably an optimist, but a cautious optimist. And I think I'm fairly conservative, but you have to watch out for those opportunities that happen, and that's when you can really advance in your life. Right now, it's very challenging. When the interest rates went up, it's challenging, and there are many good deals out there, but they are going to be long deals, and it depends on your investment horizon. And if you're able to stay in the game, maybe you are investing not just for yourself, but you're maybe investing for the next generation. When you're able to do that, then you're able to sit back and not take uncalculated risks. However, you do have to watch for the opportunities. And uh, I like to tell the story about a friend of mine who built a very nice house, a vacation house. And he and his wife had planned this house and designed this house for over a year or so. And they built it, and they were very happy with it. And so it came to be moving day, and they're moving in, and they've got boxes, and they're moving into their house, their brand new house. And there's a knock on the door. And they go to the door, and there's a man there, and he says, "How much do you want for your house?" And he said, "Well, we're just moving in. My house is not for sale. We're just moving in, and we love this house, and it's not for sale." And then the man said again, "Seriously, well, how much do you want for your house?" And he said, "Look, it's not for sale. No, we're not gonna consider selling it all." And then the man said, "Well, how about this number?" And the number was obviously more than my friend had ever thought possible. And so he puts down his box and he walks back into the house and he said, "Honey, I just sold the house." And uh, it reminds me of the situation of being an opportunist. Um, they obviously did very well on that sale, and they went on to build a nicer house, actually. But it's a funny story about being opportunistic, and I like to say that. When somebody presents a buyer, and a buyer comes along and it's the right time, it's the right price, in the right situation, then I suddenly become a seller. And I may not have been looking to sell a project or something, but uh, I took advantage of the opportunity. I joke with my wife that everything we own is for sale, including the kids and the dog. But we uh, it is somewhat true that you have to be opportunistic and be aware uh, and recognize when opportunities come along. Right now, Sammy, I've just been really conservative with our real estate stuff. And I have pivoted. We have been typically investing for appreciation, and that's great. Most real estate projects are long term, and you can invest for long term appreciation. But we have shifted a little bit here recently to short-term cash flow. And that is one of the reasons we decided to buy this business and to get into that cash flow business. And it's worked out very well for us. And I think that a person has to have the balance. So it's nice to have, like I said, the appreciation and then also the cash flow as well.
That's just such a great point. I see a lot of real estate investors or crypto investors or stock investors, daily traders. Everybody seems to just lock in into their trenches. And I always say, don't diversify. Maybe that's your strength, that's your market that you understand very well. But diversification is key. And even if when I invite my real estate investors to participate, I always ask them, what else is going on in your life? Are you growing your own clinic? We have a lot of doctor investors. Are you a private? Um, is all your money in mutual funds? Or are you giving all of your wealth to an advisor and you're not even looking at it and doing it age-based and call it good? Maybe that's good enough for some people who don't even want to think about it, but are you more active? Are you monitoring what's happening to the market? Are you diversifying? Are you changing your tactics? You know, timing the market is always almost wrong. You just have to change your tactic and navigate. A lot of our investors say, why are you developing in this environment? I mean, construction cost is high, interest is high, labor is high, supplies are short. I mean, this is the wrong time to invest. I'm like, yeah, you can always paint any situation with a broad brush. That's always going to be the case. But if you navigate and you find those niches in every market, niches in every industry, switching your tactical investment strategies, you know, like you can say, listen, my strategy is I want to diversify, but tactically, this is a time for my age and my risk tolerance to do more cash flow. Maybe I'll come back to the wealth building, or maybe I'll just put my money in these long-term deals for wealth building. But when it comes to income and it comes to how I'm going to keep the this wheel rolling, you need to think about it that. So I always ask my investors, like, what's on your mind? What's your risk tolerance? What other things are going on for you? And if this investment is not a good fit, I'll be the first one to tell them, hey, listen, this is not for you. I know you're excited about it. Maybe you're watching too much news. You're either excited too much or not excited at all, because the first advice I tell everyone, can you stop watching the news? You know, maybe it's your source of information
That's
now.
good advice. Stop watching the news.
But
Yeah,
everybody goes through that roller coaster of emotion on the left chart here. Like, you know, everything is great. Everybody's euphoric and excited and optimistic. And then you get to have one bad experience and you start sliding onto that curve into, oh, I don't want to do this anymore. Maybe I should wait. Maybe I should ask people. And that's not necessarily bad as long as you're aware it's happening to your emotion. So you can assess the market, you can assess the partners, you can assess the data. But I love what you said, Paul, about knowing yourself and
yeah,
you knowing your emotional state at that time. So
yeah,
many seasoned real estate investors and developers. It's easy when you're like an outsider to see that they get caught in emotions. And I always tell my wife first, she's the best, you know, gut check. And then my team is like, are we doing the right thing here? Because with how much experience you have and you do check all the boxes and you check all the things and you follow the process, there's almost an element of emotion. As long as you're aware of it, you know how to work around it. So yeah, you can be excited. You can be, you know, maybe extra cautious and maybe you're responding to something beyond the deal. But as long as you're aware this is happening, and that's kind of how I tell the people is like, make sure you understand what's going on here and don't get too excited about it. I don't want this blind trust, or I don't want that sort of extra excitement about a deal because it's in your neck of the wood, or maybe this is your, you know, if you're a doctor, you don't want to invest in every medical office that we offer. You know, maybe this is not for you. So there's always that element of like, make sure you understand your state of emotions and make sure you understand how to deal with it. I think it's the advice that I really loved what you were talking about there. Economic clock, we always talk about economic clock. I think we're in a situation where we're kind of like outside of that box at this point. There's a lot of uncertainty in the market. So it's a little bit uncharted territory. People can say, we've seen this in the 80s, maybe, if, in that inflation period. But at the same time, if people study history enough, they'll see that it's always a cycle. So if you think this is new, this is not new. If you think this is different, yeah, it may be different than the last cycle, but it's definitely a cycle. So that's how I like to frame things for people. So that at least they're aware of, from a historical context and from emotional context, what they're dealing with here.
Al, if I might add, along with that cycle, everybody needs to realize that there is a cycle and it will repeat. It does all the time, and it does because of human nature. We are humans. We're going to continue to make the same mistakes year after year and generation after generation, and we're going to continue to make the same positive moves as well. But to that point, and there's a couple of questions about appreciation versus cash flow. And one of the ways that, for me at least, that I take pressure off of a deal or take pressure out of an investment and take part of the risk away is that I think about my timeline. So years ago, I decided, I came with this idea that why am I trying to invest for something that I'm trying to buy or try to do in the next few months or the next couple of years and things like that. And I'm very blessed that I have a wonderful family and I have wonderful kids. And I kind of realized a long time ago that I'm not just investing for myself. I'm investing for the next generation as well. Um, in our development company, we had these two brothers. One brother was 90 and the other brother was 92 years of age, and they were investing in 30-year projects. And I asked them one time about that, how they put all that into context, and they said, well, investments aren't for me. Investments are for the next generation. Or the investment is for my charity, or the investment is for something else that I have planned. And I think when you take that timeline out of it and that time crunch out of it, you then can wait out some of these cycles that happen. And that's okay, because these are externalities that you have no control over. You have control over your internal deal and your parameters, but there's a lot of things you don't have control over, just like you don't know those next two cards in the poker game. So calm down, relax. It'll happen and it'll happen in time. Um, be aware of the opportunities that come along, but if you invest for the long term, I think that's very helpful. Again, balanced with the cash flow. And somebody asked us about cash flow here. So what are cash flowing investments? Cash flowing investments are typically businesses, and you can be a part of these businesses either as owners or as investors. And they typically have their own particular cycle. So I would suggest that you invest in a business that you know. And so I pretty much stick to medical type of businesses. We own an ER, we own some dentist office, we own some other medical businesses, and we own a building with Al with some nice physician offices. We do like medical a lot. I'll go out on a limb and say that because medical is something that is uh, we feel is recession resistant. Everybody continues to get sick. They will continue to get sick all the time. And we learned that in 2008 when we thought that the world was ending. Patients still kind of came in our door. And so we had to treat them. And so medical businesses are a great stable business. Sometimes they're not, they don't, their returns are not as robust as some multifamily value add kind of building, but they're stable and they're there constantly over time. So if you want to learn more about medical offices, medical business, Al's the guy. Al's the guru on a lot of those, and I love that. And then if you are an owner, it does produce cash flow. So if you're also looking for a cash flow return that you got to buy your groceries with, or you got to buy things now, then that's great. You can do that cash flow, but also have the balance of the longer term appreciation projects as well.
Amazing. To me, recently, I've been kind of working on, now we have the investment arm in Investream, and we're anchored in real estate, but we can really invest in other businesses, whether it's completely acquiring new businesses or investing for growth is another strategy that we're looking into now, is investing in these service businesses. Medical related, definitely. Dental is another one that we're looking at. Manufacturing, believe it or not, is coming back. Logistics, those are industries we love. I come from technology background in oil and gas, and people think these industries are too much in competition. Energy, we just need more energy. Electric projects, I mean, grid projects, service construction projects. There's so many things that can be done right now because the economy is evolving really fast. So I see the complementary nature as long as, like Paul said, you know that industry well, you have a connection in it, you have history in it, maybe you worked in that industry as an employee. Those are good areas. But service businesses in general is where the economy is going to continue to flourish here in the US, and plus manufacturing is coming back. So if that's an area that you have expertise in, those would be areas I would recommend to look at beyond real estate and investments and all that.
And obviously, everybody is getting hit over the head daily about AI. And the thing about AI is that we have to remember it takes a tremendous amount of energy, as Al said. So electricity, energy, and all of that. And so data centers are all great as well. But AI will be a big part of all of our lives. It is something that is life-changing. And any businesses around AI, I think will flourish in the future.
Yeah, and then Al put some cash flow business on the horizon bullet points in the chat, and that was, I mean, we've already talked a lot about opportunities and what you're focused on. I would say, so as you're talking about these cycles, everything coming in cycles, I do a lot of archival research, so I look at a lot of history and go, oh yeah, I remember, yeah, that looks familiar to me. So that definitely spoke to me. But that also means that there's new folks coming in all the time, right, with each cycle. So, what kind of advice would you have for someone coming in new to real estate? You know, anything they can do to blunt those risks? Are they going to get that wonky first pancake before they start perfecting, or what do you think?
You might, you certainly may get that wonky first pancake, but obviously this is kind of old news, and it's not something that I've made up, but everybody says get in early, and the longer you are in the game, the better you are. And of course, learn every day, read a ton, and talk to as many people as you can. One of the problems with investing, as we all know, is how do you get advice in investing from somebody who's not trying to sell you something? Um, that's always perplexed me. And you have to simply get in the game, and you have to learn on your own. Um, and so keep, great, thanks, Amanda. You've got to, you've got to, you've got to do the work. You really do have to do the work. You have to pay attention to it. and do it well. So early investing, getting in and don't get out. There is risk always exists. Manage the risk and do something that you know or that you love. Maybe it's a social type of investing. My wife would never let me invest in Philip Morris because it was a smoking company and making cigarettes, and of course I didn't. But I mean, if there's something you're passionate about, follow it. And again, don't expect perfection right off the bat. Um, uh, but learn and so we like to say there's no mistakes, there's only learnings. So learn from everything and be patient with yourself. But do start and do get in and start and as Al said, diversify. Do have some stocks, do have some bonds. I mean, and again, I want to preface all of this, and I should have said this earlier. I am not a financial advisor. I'm not a financial analyst, and I don't have those degrees. And so please take everything I'm saying as just my opinion. But that would be my advice for young people. And then the other thing I would say is find a good partner and start partnering.
I would just maybe reflect on that last one that you said. I'm now getting into the mode of continuous scouting, just like you would scout for, college football players in high school. Partnerships needs effort and scouting. Like if you want to do something, you need to be in the right rooms, you need to be in the right places, and you can get lucky if you are in those rooms and in those areas that you're more intentional about thinking about who do you want to partner with and why, and being in the right places to find those folks. So yeah, I have now, my scout is my word of the year, as Sammy says. But scout obviously is building a relationship, and it's not a transactional exercise. Like you said, you have to use logic, you have to be complementary skill, but you have to follow your gut and see people for what they present. Um, you've touched on a model that I really love, which is like, being knowing yourself. I want to come back to that. There's an Ikigai framework that I love, that I'd encourage everyone to look at. It's basically the intersection of what you love, what the world needs, what you can be good at, and what you can get paid for. So if you can bring those together and not do Philip Morris investments, then then things flow. And it's not just flow, you build momentum with it too, because you're not fighting something in you to make things happen. And it is something that will give you that sort of momentum and the wheels spinning, and give you that, um, call it confidence, and building that muscle, like Paul was saying, you know, if you haven't invested, you're not gonna know if it's good or bad. You have to invest. If you haven't tried it, you're not gonna have experience. And the more you do it, the easier it gets, and your subconscious kicks in because you've seen enough. And by the way, subconscious is your gut. That's your experiences. So you just have to do more and more until and fail some and win some, and over time new opportunities present itself in ways that you never imagine. um, and since I left my career in the last short 4 years, I would say I transformed personally multiple time over, and I've seen opportunities I never thought I'd be working on, beyond real estate, in real estate, with partners, learn new things around investments and our businesses. And sometimes you can't plan these things. You just have to try and build that experiences, and opportunities present themselves. Okay. Go
Can
ahead,
I
Paul.
say just a
Yes.
couple other real basic things, and this is something you all know, but I just want to remind you is that leave ego out of it. Do not fall in love with your investments. Do not go around and say, I own part of this building and I'm a great person. And leave ego out of it. And if you fall in love with your investments, you won't treat them objectively, and you won't know when to sell. Knowing when to sell is the hardest part. Anybody can buy, but knowing when to sell is the hardest part. So leave ego out of it. And then I would also suggest two things. Be a good listener and listen to other people. Uh, and along with that, be a lifelong learner. So when you're out for coffee with people, when you're talking to people, listen to what they're saying. I know this sounds super, super basic but you can learn so much from other people, and you'd be surprised what you learn from certain people that you don't think know anything, but that's huge. And then if we're getting towards the end, can I say one last thing? And
Yes.
this is something from Matthew McConaughey's new book, and this kind of touched me a little bit. He said, and this is all about kind of summing up risk, I believe, is he said, "My faith allows me to have courage. My courage then allows me to take educated, calculated risks. These calculated risks then allow me to grow, and my growth allows me to be a better person." And I think ultimately that's what we're all trying to do.
Amazing, amazing. That's a big mic drop there. Um, I wanna thank you, Paul, for that. Very, very thoughtful and deep. I would like to open the floor for questions. I know we probably addressed all the ones in the chat, but I just want to make sure that we do. And then you can unmute yourself if you have any questions. So as I'm browsing through the questions, if you have anything, please unmute yourself and ask your question.
Um, I do have a question. Hi, how are you? Thank you so much for everything you shared today. I appreciate it. And I resonated with a lot of things you said because I found myself going through this process in my life, even without realizing it was a thing. Like when you were talking about courage and faith and taking risks and growth, I felt like I went through all of that without even reading a book or knowing that what I'm going through. Okay, so what do you do when you find yourself in like a fork where you have to do this or this, and both of them are pretty close? It's like, what do you do? You have two things that you have to make a decision, whether I go this way or this way. Both of them have cons and pros, and what do you do at that point?
So the famous answer is when you come to a fork in the road, take it, right? Um, but I think this is where, as Matt, it all comes down to your gut and to your feelings. And probably the other thing I would highly advise is that there's probably not a true right or wrong reason or right or wrong answer there. And don't put the pressure on yourself to think that if I go this direction, I'm going to be a winner, and if I go the other direction, I'm going to be a loser. It's probably not that way. I think probably will learn on both tracks, and it's going to probably come down to your gut feeling. Whether that's the gut feeling with a new partner, a gut feeling with the project. It could come down to financially what it is, but they're probably both uh, decent pathways if you're right at that fork. Um, and so I just have to say I don't know that there's a right answer. I think, but the answer I do want to impress upon is don't put yourself in such pressure that you're going to make the wrong choice.
Thank you. I want to ask you, did you ever feel like you were in a fork and that when you made the decision, you regret it or you felt like I need to make a U-turn?
All the time, maybe 10,000 times. Um, And
I'm
so
not alone then.
what happens when you feel like you've maybe made a mistake or that maybe something didn't go right? Obviously, what does go right in those situations is that you learn something. So again, I don't think there's a winner and a loser. I think there's a winner and a lesson. And if you learn something from that, I learned everything I've learned from my mistakes. I think that's so don't feel like mistakes are really all that bad sometimes. And if you learn from them, then that's great.
Thank you.
Yeah, speaking of that, Asmat, my son is a senior and he wants to know where to go, what to study, what college. And I kind of sensed some emotions. He kind of like was determined, this is what I want to do. So my advice was this or that. He said like I want to go here or there, and my advice was simple: explore is what was my answer. Explore. If you don't explore, you're going to continue to build some kind of theory about the options and you're still like not exploring them. So if you explore them, maybe explore some of it, one way or the other, or both if you have the opportunity, then you're quickly gonna fail fast and decide, maybe become more determined to do what you were trying to do. So I would say explore, and if you fail, fail fast, and if you fall, fall for a very short period of time. You're allowed to be knocked down, but don't stay there for a long time. Just pick up and keep going. But
Hey, Al, I would like you to do Chat GPT and find out how many kids change their majors in the first 2 years of college.
so I learned from my son that the big Ivy League colleges now allow you to be undetermined for 2 years. They actually changed the programs already to count for that fact. They're like, hey, listen, don't make that decision when you're a senior.
Right.
Or when you're into college, like go explore for 2 years before you actually sit down with the advisor and decide what to do, which was brilliant. One of the universities he went to, he was looking at, I think it's Northeastern in Boston. They actually have 1 year in a different campus in a different city. So like you go 4 years, 4 different cities across a pond in Europe even
Yeah.
before you actually lock down what do you want to do when you come back, which is interesting. So I think explore, fail fast, and pick up your stuff and keep going is the best advice. You can't. This fork concept is something in your head that is forcing you to say black or white. Nothing is black or white. Awesome. I know we're 2 minutes over, but is there any questions? Wes, go ahead.
Dr. Cink, thank you for taking the time to join us tonight. As a previous small real estate compared to you, Marshall, you have done a lot. What have you learned from your previous losses in real estate?
Um, I've learned a lot of the things that we've said tonight. I think one of the things that I felt early on is that I felt the pressure of making the right decision. And as we've said, when a decision was made, whether it was right or wrong, the main thing is to learn from it. And I think I became a better investor, a better person each investment that I made. Um, so the other thing I'd like to say is that I've been over my head my whole life. People say, I don't want to get into that investment. I don't know anything about that. I don't know anything about whether it's a medical or industrial or something, or a certain investment or a company, because I don't know anything about it. And I don't want to get in over my head. I tell you, I've been over my head my whole life. And I think that is that's me. It may not be everybody, but that's how I've learned. And the whole point for me is learning as you go and being open to learning and having your mind open, let your ego go away, listen to other people, and take good advice and try things, and just try it. Most things that you feel in your heart and your gut are worth the try.
You know, the hardest part in real estate when you lose a deal or you go, like you said, you go south on it, it just kind of gives you that setback.
It
And you said,
does.
and you know, it kind of depress you a little bit, but I guess being the entrepreneur in you, you want to get up again and go do it again because
Yeah,
coaches in sports, I learned that in coaches in sports, great coaches, whether college, NFL, NBA, etc., really taught me to get up again and go try again. And this time,
absolutely.
hopefully, it works. And many of the times it works. Others did not work, but like you said, you just learn from it. You just deal with your losses and lick your wounds and move on.
Yeah. And Wes, also remember, you're not just investing for yourself, you're investing for the next generation as well.
Yeah,
And you kind of owe it to them, just like you owe it to those mentors that went before you. I mean, I had a grandfather who came over here on a ship, and he was like uh, Leonardo DiCaprio. He just like was in the bottom of the boat, and he didn't have 2 cents to his name. And how did he think about coming over here and doing that and having the courage and the guts? And I think he died with about 2 cents in his pocket too. But still, to come over and do that. I mean, I feel like that's the curious DNA that I might have inherited, and I kind of owe it to them to make my life as best
yeah.
it can be.
Thank you.
Amazing, amazing. All right. Thank you, Dr. Paul. You've been one of my mentors, whether you know it or not. I watch you navigate few deals. I've watched you navigate few conversations, and I was, always amazed by your ability to sort of, like you said, slow down, absorb, get the emotion out, and definitely I learned a lot from that. Thank you for your time tonight. We will be posting this on our YouTube channel, and our next webinar is going to be in November. Sammy, what do you have for us?
Yes. So in November, we're going to be talking about emerging technologies and how they might impact real estate. So feels like a good going into the new year, thinking about new things. So should be a really good conversation. I'm excited about it.
We also are going to talk about AI. I get it. Okay.
And other
Ama-
things, and other things.
Amazing. Thank you everyone for joining us tonight.
Thank you
Have
all.
a great
Appreciate it
Yes.
so
night.
much.
Thanks, Paul.